Greetings, and salutations to you, all my brothers and sisters out there in the trading world. And today we have got together to talk about one of the most important things, if not the most important tool in your arsenal, and it is your watch list. You're going to use it every day, you're going to use it multiple times a day, so we need to have a good one. We need to have it solid, and you cannot just be out there wandering around looking for a deal, looking for a stock. Getting a good watch list builds familiarity, it builds knowledge, and it builds money. So let's go ahead and get to working on an effective watch list. Hey, if you've been trading any time whatsoever, you know that a watch list is very important. Maybe you've got your own watch list going on. Maybe you use some other watch lists. There are always different ones that you can access and get to. But we should just build our own. We should build our own from the very get go. And if you're a new trader, this is absolutely vital. Building the watch list really gives you a pulse of the market each and every day, all day long. If you build it right, you're going to know what's happening. You're going to be informed of what's happening around the market, and it's just going to make you a more effective trader. You don't want to get into maybe you're a tech person, so you get into several tech stocks, and you don't look at the futures of tech, and all of a sudden you miss a move. You miss a move coming at you. You miss a pullback, but the futures are going to give us ideas. The ETFs are going to be handy. So everything's going to come together to give us a heck of a watch list. So let's go ahead. Let's get to building this watch list step by step. This is going to be an educational piece. I guarantee you're going to find something on here that's going to be useful to you. So let's get started. And the first and foremost, number one, building a watch list, you need to have the futures. The futures have to be on there, whether you trade futures or not. They need to be on there because they are the 24-hour pulse of the market. They're 24/5. They run all the time. The whole time you're going to be trading, futures are going, and they're going to give you a future glimpse of what's going on in the market, whether it be whatever action you're looking for. If you're looking for the S&P, if you're looking for the QQQ, if you're looking at gold, if you're looking at silver, oil, whatever the case, these futures will give you an insight to what you're doing. So you need to have the futures going on, and in that you also are going to have ETFs. Maybe you can't trade futures because they are a big dog product, but there is a micro version of them. There's an ETF that can come in, and then we're also going to have our stocks and our personal picks that are all going to be part of this one watch list. Now, just to forerun this, you're going to build a watch list of all these names, and then once you get familiar with what you're doing and where you're going, then you can begin to break them up. So then you can break them up by sector. Then you can break them up as just a futures list, just your stocks list, or whatever the case you may be, whatever is comfortable, makes sense to you. But you will have one big list, and then we're going to break it down into other lists on your terms, however you see fit, however you trade. So the very first thing we're going to need is a futures list. The futures list is going to give us, like I say, a really great glimpse into what's going on. That way we're going to know what's going on around the market, what's going on inside of our very own stocks. And in this, the futures list is a very simple one. It's a very simple one. You're going to have all of them are represented by a forward slash kind of notion, and they are going to be what we look at first each and every day. So our overall list of futures are going to be, again, forward slash, it's going to be ES for the S&P, it's going to be NQ for the tech sector, for the QQQ, for the triple Qs. You're going to have YM for the Dow. You're going to have RTY for the small cap stocks. Now, all four of those will cover mainly most of your main stocks. That's going to get you involved. That's going to get you seeing what's going on in each sector and overall. But there's going to also be GC for gold. There's going to be SI for silver. If you're paying attention to the metals, if you see gold and silver moving, well, there might be an odd that copper's running right along with them. What's uranium doing? What are these other things doing? And running right along with them of always kind of an interest, gold, silver, and crude oil, forward slash CL. CL is a big product, but you can see what the oil prices are doing, and maybe you trade around the oil prices. Maybe you have sub trades that relate to the oil prices. Maybe you're into energy, and these kind of things can give you a forward glimpse into it, especially NG, that is natural gas. If you're into natural gas or you're trading any kind of utilities, that's a great moniker to look at. If you're into a bonds, you got a ZB and a ZN, both in the futures. And these bond markets are a fantastic. These are all subjects we could go deep, deep, deep into of how they translate into what we should be looking at. But for now, we're just going to introduce them. 6E is the euro. If you want to look at what the euro market's doing, and the DX and the dollar, if you like to trade any kind of currency. So all of those right there, right there's your list. Look at these items. This is your list of what you need in your futures to begin with. Now you can always add, subtract, or whatever you want to do, but this right here is going to give you a great overall cross section of what the market's doing at any time of day. So whenever I get out of bed, I need to know what the futures are doing. The first place I go to is the ES, and I just work my way down. I don't trade currencies, so it really, it's not that important to me, but I always like to look what's going on, just to know. And then one time you're going to think about this and how it ties into that, and you're like, oh, I understand why I watch that now. But we'll talk about again that for another time. Now, as we mentioned, these futures are big dollar products. They are not to be taken lightly. They trade a little bit differently. They also, they just have different settling options a lot of the times, and they're not for smaller accounts really. They're for a little bit larger accounts. I'd say futures really fit the $100,000 account. I mean, there's some whatever, but the nice thing is there are micros. There are the micro version of all of these out there, which is a tenth of the size of the product. Now we're getting into something we can deal with. If you're a smaller account, if you're a new trader, this is where you need to be until you get a firm grasp on it. But it's a great place to be, and there's no risk of you laying there and getting these stocks because they're not stocks. Futures. So just focus in on maybe these micros, have the other ones you look at to see what the overall market's doing, then have these micros ready to go when you decide, hey, that looks like a trade for me. Boom, you get into the micros, and you got just in the exact same order. You can see the MES, the MNQ, you've got your M2K, right on down the line, the MCL. All of these are going to be great options for you to get in, do what you want to do, but not have to really bet the farm on anything as a small account. So it's a great thing. And then if you move over, you'll also see that there are also indexes, ETFs, that you can trade for these things. There's also kind of stock equivalent if you want to get into those. We are off now, we're getting into the more familiar territory. Now we're getting into the SPY. You see the QQQs, the triple Qs. Now you see IWM and GLD and SLV and USO and these types of things. UNG start making an appearance as the stock equivalent of the micros of the futures. So now we're starting to see a little bit of something take effect here. Now we've got a little bit of structure. Now we've got a futures to look at. We can see how we can trade futures by looking at the micros until we get big enough to trade the overall futures market. And let me just tell you, futures, natural gas, NG, there's trades in there they call the Widowmaker. Now, I don't like to test the waters that way, man. I don't want to get in there and try to test something they call the Widowmaker. So you can just find me over there in UNG. Just the little things. The bond market, I don't really understand the bond market fully yet, and that's my fault. But that doesn't stop me from trading TNT whenever I see an opportunity. So, utilize these things. There's 3 different areas right there for you. And I will say that it is nice to have the futures because you don't have to risk getting assigned shares. You also get a very nice tax break. Futures will give you a tax break of 60-40. They won't count it all as short-term gains. They'll count 60% of it as long-term gains just because of the way it's set up. I don't ask those questions. I'm not an accountant. I'm not a financial advisor, but I know that's a good deal if I don't have to pay as much taxes on my earnings. There's always huge liquidity in these futures. There's a high volume being traded at any time of the day. I mean, when we talk about ETFs at any time, ETFs are a great, safer play. Not all ETFs are created equal, and we've done a great video about that I'll put the link in at the end of this. But it is a great way to get in there. ETFs are a great play. The SPY's an ETF, the triple Qs are an ETF, IWM's an ETF. So you have all these great ETFs that are in that other video that you can can really make a play here for, put on your watch list. And that way, if you're thinking about getting into financials, you can just get into an XLF. You can get into some sector where you can just kind of watch how the overall market of that sector performs. You can get into that ETF and see, hey, what do they really believe in? What are their top 10 holdings? You can go deep down into it. No, I mean, S&P 500. You can get into an ETF that covers all 500. You can see who's at the bottom, the middle, the top. You can analyze that thing 6 ways from Sunday. But it is a great way. It's a great opportunity for us, and an opportunity to really get some exposure and learn a lot of things about a lot of companies that we did not have an idea about. And I highly recommend you look at that ETF video, because it's going to give you a lot of insight and a lot of things to look at. We talked about why choose futures, and that's why we choose futures. We choose futures for the tax break. We choose futures because you can trade them 24 hours a day. We choose futures because of the liquidity, the volume. I mean, all of it fits very well. You just have to be careful. That's why you get over in the micros. You can really burn an account to the ground. I mean, humongous accounts. Trading firms, prop firms, all these people have lost their entire company based on getting too far over into a future, because you can get hung out to dry at a future at one place, and in 2 weeks later it'll be exactly where you thought it would be, but it's too late for you, because these things don't play around. So again, I just tell you to watch, but just understand that the futures carry a lot of benefit to them when you're able to trade them. And being able to trade 24/7 is a great thing, especially if you're still at work, you're still full-time full-time worker and trying to be a trader. You can't get out at lunch all the time. Futures gives you a nice way to make trades, and there's even, cryptocurrency futures and everything. So you'll find a future that you want, a future that you like. I just give you those futures just because those are the main ones that'll give you a good cross-section of what the market's doing. I like XSP because it has zero classification. It is not a future. It is not a stock, but it is a great little trading vehicle. It is around that 775, 800, 825, 750 range, however it figures, whatever day you're watching this. But you get that, and you get the benefit kind of everything. You don't have to worry about it closing the stock because it closes European style to cash. You don't have to worry about any kind of assignment risk. It trades 60/40 by the government standards, so you get a nice tax break on short-term gains. You only have to pay 40% short-term, 60% long-term. Not tax advice, not financial advice. That's just the way it is. So, XSP is a really great trading vehicle, and they trade cheap. You can get in there and put credit spreads, call credit spreads. You can get into all these different options that are a defined risk type option. You can get in there on a cheap. Now, make no mistake about it, undefined risk, naked puts, and all that stuff is not going to be cheap whatsoever. It's not even going to be close. I mean, it's going to be very expensive. But if you're looking to just trade, put credit spreads. If you're looking to have a kind of a core, I do this daily, you're a zero DTE person, really XSP is a very nice trading vehicle for you. You get the best of both worlds, and you know what? You get to have a lot of fun with it because it's always active and it's always very excitable trade. But, you have to watch your firm. They may not trade it 24/7, or 24/5. They may, cut it off at 4. Just watch what you're doing there on that. But if you're looking for a vehicle to trade, that's a great one to take up on. So now let's look at where we are. Let's look at what we've done here. We're talking. We've got our overall picks for the future, so we know what the overall market's doing. We've got our sectors in there. Now we've seen some ETFs that kind of cover. I'm not saying an exhaustive list by any means. I mean, there's more ETFs than there are stocks. There's thousands of stocks and thousands of ETFs, but the watch list keeps you from having to wade through all those thousands of things trying to find a trade, because it's exhausting trying to find a trade that way. It's exhausting when the market's flat, when the market's down, or when it's not doing exactly what you want it to do. It's hard to find a trade sometimes. All these stocks are out there, but it seems like they're all equal and none of them's doing anything and none of them's attractive. But if you have your watch list, if you have your sectors down, you have the futures down, you know what's going on. You've been watching these. You know how the stock trades. Hey, this is a bottom for this stock. Now, it may not relate that this is a bottom for the market, or that this is the whatever that the people are telling you, but you know this stock. You've been watching it on your watch list, so you're savvy to what this thing's going to do. So if you know that's usually the bottom for it, you can put on puts on the stock when nobody else is doing anything, and you can catch that big up move, or you can, put your cover call, your limit here, or do your strangle, whatever the case is, or however you trade. You can do that because the more familiar you become with a watch list, the more familiar you know how to trade a stock. You know what options are really good for you. You know what options aren't. You know strike prices. You know all these different things, how fast that delta moves. You become very intrinsically known to the stock. And that's what happens. If you see these people trading on prop firms, they don't walk in the prop firm, get hired, and then they throw them a bunch of money and tell them trade whatever you want. Hell no. They go in there and they say, here's a stock, here's 2 stocks, 3 stocks. Get familiar with them, understand everything they do, everything about them, know everything about this company, and you can trade them. And then, they slowly get let off the leash a little bit. They get the longer rates, and slowly they build their account that they're allowed to trade up. But they don't go in there and just go in there free, just absolutely free will. They go in there with, here's your stock, go learn about it, and we'll let you trade this one thing. Sectors cover the groupings of stock. And sooner or later, once you get it down, you'll have different sectors for watch list. You'll be able to scan through them and do very well with it. But there are 11 different sectors that I recommend having. I mean, you could break it down however you see fit, but you've got energy, you've got healthcare, you've got real estate, you've got the consumer discretionaries, you've got the consumer services, consumer staples, you've got, what else we got? Utilities, materials, industrials, financials, and technology, infotech. So you get those. Look at these sectors. You get those and start building stocks into these sectors that you like, not just stocks that somebody else likes, somebody told you was good or anything else. You want to watch this stock. Let's say you're interested in Tesla. You start watching Tesla. You watch it. You watch how it trades. You watch its ups. You watch its downs. You see how it has these huge swings each day. You know the highs, the lows, the range. You see what it does, and then you place it into a sector. Put your stock that you want to watch, boom, into the stock watch list. Then after you're familiar with it, you're like, you know what, this is something I like. This could be a tradable vehicle for me often. And you don't want to put stuff in there that you just want to trade once. You want to put stuff in there that's a repeat customer. You want to put Tesla in there because you like Tesla, you can trade it, and you'll have a good time with it. So you put Tesla in there. It covers everything while you're watching on your top stock watch list, and boom, then you put it into the sector watch list, and there it has a home. So that is a great way to do it. All these sectors have, multitudes of stocks in them. You can't watch them all. You don't need to watch them all, and I wouldn't recommend doing that. So narrow it down, keep narrowing it down from the stock watch list. And hey, these are the top stocks by sector. These are the ones that when you watch them, they're going to, cream rises to the crop. You're going to see, I really like this stock. It's been doing well for me. It trades well. It does good. So I'm going to keep it on the list. And this is your top stock watch list. And at the beginning, this is just going to be all your one big watch list. And all of a sudden, you're going to see these top stocks in, and boom, you move it over to the sector. Boom, move it over to the sector. And that's how it's going to work. Maybe after a while, you start watching it, and you're like, oh man, Exxon is definitely the cream of the crop of this energy sector. And it kind of is. So you move XOM right on over into your energy sector list that you have created. Now this whole process is going to take, it's not one day or 1 week. I recommend taking this process and using 6 months to do it. I mean, slowly just build this great watch list that you have. And the thing about it is, you're going to be just like the ETFs do. If there's a dog in your watch list, you throw them out of it. If there's a really good stock that you've noticed that you want to start watching, you bring it into the fold, and you do just like we're doing and what we're talking about. You bring it into this top stock watch list by sector, and then all of a sudden, you're moving it where it needs to be. And all of a sudden it becomes a trading vehicle for you. It's perfect. So, you have Meta and Cat and all these top people of the sector, but is the top people of those sectors what you want to trade? Like right now, Meta's a disaster. I mean, it's a total mess. So no, let's look down. Well, with Microsoft, well, we don't want to trade Microsoft right now either, unless it's shorten it because it's a terrible trade. So you got to get in there and be like, oh, okay, let's look at this up and comer. I've heard about that stock, and you be like, I can't list stocks stocks, I don't know, a bunch of stocks, take out a pen and a piece of paper and just take a lap around your house and then start thinking. You're walking around, you're seeing what brand of television you have, what brand of air conditioner do I have? Do I have a generator? What is that? What kind of light bulbs am I using? What kind of car do I drive? Just start thinking about these things, and all of a sudden you begin to get a list of what's good. What is some stocks that I can watch. Now, after you get on there, you might see that, oh my gosh, this stock's terrible. Oh my gosh, I love Ulta, but I didn't know it was a $500 stock. So all of these becomes revelation to you, that what you can trade and what you want to look at and what you want to notice. But you just need to get in there and start going on. Let's say there's an Amazon delivery every day at your house. Why don't you start watching Amazon? Do you use Google every day? How good of a stock is Google? What bank do you bank through? Just start thinking about these things, and all of a sudden, just stocks are just going to pour out of your mind, because there's so many things just around your house that you can absolutely trade. Do you shop at Macy's? Do you shop at Kohl's? I mean, do you go to Kroger's? I mean, just start thinking, and all these things will reveal themselves to you that you probably wouldn't have even thought that you even knew. And before you know it, you're going to have a hundred name watch list. If you count the futures and the stocks and the ETFs, you're going to have a huge watch list. And then you start breaking them down to a more digestible thing. You pull some out, you put some in. Hey, you know what? I heard energy's going. Let's go to my energy watch list. And I see on my energy watch list, I got Bloom Energy and Oklo, and I've got Exxon Mobil. I've got Chevron on there. And you start looking at these things. What's doing good? What's in the tank? What's at a 52-week low? What's at a 52-week high? The watch list will tell you how to trade and get you kind of right on the right path. Get you corralled a little bit, instead of wandering out there aimlessly like, oh my gosh, I found a stock, let's trade it. That's no way to be. That's no way to do it. If you have a watch list, you can watch how your stocks are starting to fall. You can watch how your stocks are starting to raise, and the times to get in them. I'm saying, boy, that's coming in. Like, I know that ELF trades between $50 and $100, and it has for a long time. So when I see that stock at $50, I know it's time to get into ELF, and I'm about to have a boom. We've talked about in this video, stock was at 50 some dollars, now it's at 98. So boom, it's a double up, and it's done that several times. What are we going to do now? Now we're going to watch ELF from up here, and we're going to watch it fall back down. We're going to get back into it. We're going to make money on the way back down. Boom, then we're going to make money on the way back up, because we know the watch list. We understand how the stock trades. Now, will it throw it a curveball every now and then? You better believe it will. Sometimes the stock just wins. But if you have your watch list, there's not too many times that has a whipsaw effect. There's not too many times I get beat up by this stock. It doesn't go crazy. Strangles work great on it. Whatever the case is, the watch list is going to be your guide. Just like we were talking about, that there's smaller versions of the big futures, there's smaller versions of the big stocks. Maybe Exxon Mobil is too much for you. Maybe 100, it trades around anywhere from 125, 150, and once in a while it'll dip a little bit lower, but maybe that's too much. Maybe you don't want to trade that. And if you have a small account, yes, that's probably too much for you. But have you looked at Occidental Petroleum? Have you looked at, can you step it down? There is a play that's a little bit lower. Not an Exxon per se, but there's somebody in that exact same space that's going to travel right along with it. Maybe Cat is huge. I'm like, oh my God, can't trade $1,000 stock. That's not going to work out for me. But maybe CSX will work out for you. There's all these others. JP Morgan, Goldman Sachs. They're huge companies. They trade very high, and I can understand how you don't have money for it. But are you able to trade a SoFi? Is there a PNC that you might want to trade instead? So just think about it. Get in there and find it. You have huge real estate companies, but you have small real estate companies across the sectors. There's big and there's small. So you have to get in there and just start digging, just start diving in. And that's why I say get familiar with it. The more familiar you are with your watch list and with the options that you have, the better trader you're going to be. Now we've talked about all the names. We've talked about how to get all the names on there, what you're looking at, what you're looking for, how you're going to study. The one more thing that you need to do, and on your brokerage, hopefully, you have all these indicators that you yourself choose of what you want to look at, what it's going to show you. And you're going to have to choose these for yourself, because there is a boatload of indicators that you can put up. I like the liquidity. I like to see the volume. I like to see the delta. I like to have my P&L from the from the open to be on there. You know, I like to have my beta weighted delta to see where I'm at overall in the portfolio against the portfolio as a whole. I like to know my theta number. I like to know my gamma number. All these, but that may be of no use for you. You may be on a different plane, and that's cool. That's all fine. You do whatever you want to do. Do whatever indicators you need to look at, and you might have to play around with these too. You put on 12 different indicators, and you find that you're not looking at two of them. Boom, out they go. Get rid of the two indicators. Put on two that might be of some use to you. Do you want to know the ask and the bid price? We'll put that on there. Well, you know, however you trade, whatever you look at, whatever works for you, put those indicators on there so that you can see what's going on in real time. You know, if you want to know, do they have the DTE? When is dividend coming? Whatever the case, there's a lot of indicators that can kind of give you a little bit of insight as well about the stocks that you're looking at. You know, maybe you're ready to pull the trigger on something, but you see that it's got a earnings coming up and a dividend coming up. You're like, you know, maybe I don't want to put a trade on that, especially, you know, during an earnings and a dividend time. So, you know, you might wait. So these all can be useful information to you, but you just, you know, you have to use your indicators. You just can't fly blindly. You have to look at these stocks. You have to study, you know, your watch list. You have to review it each and every morning and each and every day. You have to know what's going on. Understand if you're getting into futures, understand how it trades after hours, before hours, what to do right before the market opens, what to do right before the European market opens. I mean, there's so much more that we can talk about with a watch list and how to watch it. But first of all, we got to build it. So let's conquer one thing at a time. Let's build that watch list like we just talked about, do what we said to do, and begin to watch it. And let's get rid of all this other fodder that we've been wasting our time with. We focus in, and the more focused and more narrow we can focus in and get rid of all this nonsense that we waste our time with, the easier it'll be. And really, that's what trading's about. It's about the KISS principle. Just keep it simple, and having a good, solid watch list is exactly going to help you do that. Hey, I appreciate all your time today. I really do. I know it's been a lengthy video, but I know there's got to be something in there that can help you along with your watch list or your trading journey. So I appreciate it. Like and subscribe if you want to. And hey, we're going to see you next time right here on Trading in Your Future.